the link to this video. Let's go to the video and see what it is. I'll highlight it and put it in the search bar. Of course, there's an ad.
Today we're responding to a YouTube video called "Here's Why You Should Never Keep Your Money in PayPal, Venmo, or Cash App." I was watching this video and basically it's completely wrong.
Never keep money in your Venmo or Cash App account unless you're okay losing. So why do people keep money in these accounts? These apps aren't FDIC insured, which means if Venmo or Cash App were to go bankrupt, they wouldn't be required to give you any of your money, which is why you should.
Thinking they're like bank accounts. So Cash App sets up their accounts, so they're literally like bank accounts. If you have we're responding to a YouTube video called "Here's Why You Should Never Keep Your Money in PayPal, Venmo, or Cash App." I was watching this video and basically it's completely wrong.
Never keep money in your Venmo or Cash App account unless you're okay losing. So why do people keep money in these accounts thinking it's like a bank? And then these companies turn around and invest your money and give you no interest. The catch is these apps aren't FDIC insured, which means if Venmo or Cash App were to go bankrupt, they wouldn't be required to give you any of your money, which is why you should.
Thinking they're
This YouTuber that he's commenting on is actually correct, just like I was correct, and now he's going to tell you something that's incorrect.
like bank accounts. So Cash App sets up their accounts, so they're literally like bank accounts. If you have a Cash App account with a Cash App card, your money is stored in a partner bank, like Sutton Bank or Wells Fargo. And it says that right on the app.
It's like a bank. And then these companies turn around and invest your
That's complete nonsense, and I'll explain why in a second.
money.
Every bank that you use, when you put your money in their bank, they turn around and invest your money. That's how a bank operates. And banks give you the lowest interest ever. At least Cash App will give you up to 4% interest on your money that's held within their savings on the app.
They give you no interest. The catch is these apps aren't.
So I don't know if you caught that, but he said they will give you a higher interest rate than your bank. He said if you put it in the bank, they give you too low of an interest, but if you put it with the Fintech app, they will give you a higher interest rate. That's because it's not being kept at a bank. They're using it and they're investing it, and so it's not at a bank. Therefore, you're not getting FDIC insurance like they're claiming.
Apps aren't FDIC insured.
That's also not true. They are FDIC insured. Cash App is FDIC pass-through insured, which means the Cash App is like a third party, but it is insured through the partner bank, like Sutton Bank or Wells Fargo Bank. And FDIC insured basically means that it's insured up to $250,000. If that bank fails, you get your money back.
Apps aren't FDIC insured, which means if Venmo or Cash App were to go bankrupt, they wouldn't be required to give you any of your money, which is what.
They literally are required to give you your money back, up to $250,000 if the bank fails. That's how it works. So basically, they made this entire video and nothing they said about Cash App is true.
First of all, that's not how it works. And I put a comment with some links explaining why that's not how it works. And I said, you don't know what you're talking about because I am literally a banking lawyer. And he deleted the comment. He deleted the comment because he did not want to hear it. He wanted to be right more than he wanted to protect you. So let's take a look. Evolve Bank. This is a bank that had held money for Yada. And Yada was one of these fintech apps that, like this guy said, was pass-through insured because even though Yada wasn't a bank, they kept it at a bank, so you'd be protected up to $250,000. And then Yada went bankrupt. No one knows where the money is. They're pointing the finger at Evolve saying, well, you should just pay them. Customers are looking at the bank. They're looking at Yada. Where's the money? I don't know. Nobody knows. How's that FDIC insurance working for you? How about this? This is a letter from the actual FDIC telling people at FTX to stop saying that you are covered by FDIC because you're not. Just because you put your money at a bank does not mean that you are a bank when you take money from your customers. So if you're a fintech app and you're taking money and putting it at a bank, that does not make you a bank. So no matter what that YouTuber says, the FD says differently. He's telling you they have FDIC insurance. FDIC is telling you they do not. And who was this letter sent to? This wasn't a letter sent to Yada. This was sent to FTX. What happened to FTX? I don't know. You got to ask them. The guy's in prison. You want to go call up Sam Bankman-Fried and ask him what happened to that money? What about this? This is another one. FDIC, this is besides FTX. They're telling everyone these are not bank. This is also from FDIC, and this is not to FTX. This is to everyone. They're telling you, third-party Fintech things are not banks. They are not banks. You're not covered by FDIC. No matter what that YouTuber or these fintech things are telling you, they are not covered by FDIC. FDIC. Non-bank companies are never FDIC insured, even if they partner with FDIC insured banks. You send your bank... The funds you send to a non-bank company are not FDIC insured unless and until the company puts them at an FDIC bank. So when they're using it, which is why they're giving you a higher interest rate than the bank, it's not covered. I'll reiterate what I said before. Do not leave your money at Cash App, PayPal, and these other fintech companies because they are not banks. You're not FDIC insured. If you have a lot of money in there, just sweep it to your bank account and go on with your life. Have a great day.